On the Spot with Lux Live, talking property, business and success in real estate.
Yeah, so apparently we're looking good. Ryan says the light is okay.
Not hitting
Everyone ready? Yes, yeah. Nicole, did you make your hair for today?
I tried.
Okay. It's your
Spent
first
5
podcast.
minutes, yes.
You spent 5 minutes. How many hours did you spend preparing for this podcast?
Honest answer or inflated answer? The last hour that we sat just setting up with prep.
Philip, you?
I didn't know I'm doing it. I just popped in.
But you're always ready. You're born ready. You wake up ready.
So I was,
So awesome. So I'm going to now ask you statistics. I want exact numbers of the market. So I can see the preparation versus zero preparation.
I think the preparation is going to end up winning, but I'll try my best.
No, so we want to just chat about the market because it's January. Today's the 30th. Let's hope we can be up by tomorrow with this podcast so people can just get a sense of where the year is going. And we're expecting interest rate drop today. They're talking about announcing it. Hopefully more than the 0.000025. 0.25.
Yeah.
What does 0.25 mean? Actually, do we know?
Basis points.
Yeah.
But let Philip explain because Philip's the numbers guy, yeah.
No. When it comes to the interest rates, I must say I'm not too well clued up on.
Yeah, so it is basis points actually, but the reality is every person has a bond with a different amount. It will be a prime and then it will be usually prime minus a little bit if it is someone who has a very strong credit history and so on, or it might be prime plus something. But the bottom line is what people want to know is up until yesterday I was paying 10,000 bond. Am I going to be paying 11,000 or am I going to be paying 9,000? So every drop is a little bit less. So that's great. And then over and above the bond, obviously, it also affects other, spending habits and so on. So we expecting the market to improve, right?
Yes, so I've seen a very busy January in Pretoria, very busy. So I only anticipated that we would get more buy activity from about the 21st of January, like we saw last year. But when we stepped into office on the 6th, it was busy. I already had inquiries coming in from the 1st of January. So that was a great thing to see. The buy sentiment is improving. We've seen stats with Uber also showing that. I think I'll get to the stats now. But there's more buyers activity, bond approvals, and so on. So that's a great thing for us and for sellers, of course.
Even Centurion, I was talking to our joint hairdresser yesterday. What is it yesterday, the 29th? She had already sold her house that she put on the market on the 1st of January, and she had already bought another one. So 2 deals by one person in Centurion. So that's still Pretoria. I know you focus on Pretoria East and you see a lot of movement there. Philip, what do you think about Centurion?
Yeah, I do think there was a lot of movement. I had viewings in Irene on the 24th. So that's
of December.
So that's a day which you wouldn't think people would be looking for a house. And I still had inquiries. Also, New Year's, end of December, there were still inquiries. So it's definitely, the market is not slowing down necessarily, but there are still people looking to buy and sell constantly. Yeah.
Okay, so what did you guys feel about last year? Philip, how did it feel like to you? You only joined us like halfway through the year, but overall, yeah.
Well, I feel the start of last year was good, and then it really slowed down towards the middle. The winter was a quite difficult time. If I just look at what results I had within every month, and then towards summer, end of the year, it then picked up again. I could see in the amount of listings I had, inquiries, everything picked up again towards the end. But I think that's the cycle, every year cycle, not necessarily what's happening in real estate at the moment.
Yeah, that's the nature of the South African market. I've seen this now for 2 years. So market activity is busy up until mid to end March, and then the colder temperatures start. So it's like it's true South African nature. When it's hot and the sun's out, we busy, we in the shops, we seeing friends, family. It's the same for the real estate market. And then here, April, May, June, it declines, and that's exactly what we saw last year. I think it was March, April, May being the worst months that I've observed in terms of buyers' activity. I remember there was a stage where I sat and I thought, where am I going to find these buyers? Because it was quiet. But anyways, then in end of June, I think it was the 25th of June, where I signed an offer, and then it just started picking up again from there. So it's true South African nature as well. Yeah.
That's true. But last year, if you look at the volumes, when you compare, we work with the Uber statistics as well as Lightstone statistics, but generally statistics of properties that have registered for a year. The volumes overall versus the year before,
Yes.
there was definitely a decline. What I saw was a massive, interestingly enough, interest in hugely luxury properties, your 20 millions plus for Gauteng, which is, I know we're not talking to Western Cape now, where 220 million is like entry level, but we're talking for Gauteng, 20 million plus is quite exceptional. And last year there was huge demand for that. So, but the rest was low enough that overall the year was lower than previous years. So that made me think that obviously rich people are not as affected by the economy. People who can afford 20 plus million are not as affected by the economy. So therefore there was a demand there because they were trusting the economy will improve, so they can go into property. So I'm thinking this year is definitely going to be better. Definitely. And also because there's quite a lot of increase in foreign investment again.
Yes.
I don't know if you guys have seen, but I'm looking overall as a company, we're looking at quite a lot of foreign nationals who are coming here, but coming here for investment, setting up businesses, going into big projects. So we're not, we're talking people coming to develop the economy. And that, of course, will then have the ripple effect of everyone being able to purchase. That's what I'm, kind of a summary for last year. But for this year, I think we're probably gonna see quite a very good increase on the market. Now the question is, for people watching, what is it that they should look out for? What prices, what price ranges? Let's start with Pretoria. Where are you seeing the most dominant price ranges for purchases?
So in my view, most market activity, or the busiest market activity is now at the under 3 million full title properties. Yes, there's still a big demand for boomed off properties, but a property in Pretoria that is priced as under 3 million and priced right should sell within 6 weeks. I've seen this over and over and over. And whilst I have this, whilst we're discussing this topic, maybe I should tell you about my most recent sale. So this property was priced at 2.45 million. We went to market.
Which area is that?
This is Newlands, so close to mainland. Newlands is such a small area.
Is it quite pumping?
Yes, it's a popular area. It's a small area. There's about 1,200 full title properties in this area, and people forget about Newlands. Some people, because they think it's part of mainland, but it's not. Okay, so we went to market at the end of November last year, and we sold it now 2 weeks ago, a Sunday. Yeah.
So 6 weeks.
So it was basically on the market. And if you look at the Christmas and New Year period where we did not do viewings, you basically have to take that off to say, yes, we did sell within 6 weeks, sold for full asking price because it was priced right. If it wasn't priced right, it would have been a different story.
But what about when a seller says to you, if it's sold for full asking, then we actually priced it too low, we should have gone for 2.6?
No, there's no ways we would have fetched the same price, because the market decides what the market is willing to pay. So the sellers could have asked much more. but they were smart about it. When we sat and we looked at comparable prices in the area and what had sold in the last 12, 18 months, they said we want to be the obvious choice, and we don't want to sit here forever, which then we did fetch the full asking price. And no, doesn't mean we were underpriced.
So in Newlands, what is the average prices that properties are going for?
In Newlands, depending on the condition of the property, between 1.8 and 2.8 million.
So you were right in the middle.
Yes. So it really depends on and also it depends on whether you in New Kloof, which is Waterkloof Glen, Newlands, the Boomdorf part, or whether you're outside of the Boomdorf part. So that also has an impact on the prices. Yeah.
Yeah. So if I built a massive house in Newlands worth 5 million, how would that fare? Even though the value of the house is 5 million in terms of the building materials and everything I've put in there. What do you think of those kinds of outliers?
So there are outliers. There are a few in that specific area. I know of one specific property. And that property was on the market for more than 18 months. That fetched a much lower price at the end of the day. I didn't sell it, but I know of the property. Yeah.
So generally, if I'm going to build it, then I just need to know I'm doing it for my personal enjoyment of the property.
Yes.
But when it comes to selling, I will potentially still have to look at the averages. So the 1.8 to 2.8, even though I built a 5 million rand house.
That's correct. Yeah. Because the person who is looking for 5 million rand, or who can spend 5 million rand on a property, might just go and look in your neighboring estates.
Yeah.
Waterkloof Golf, Woodhill is a golf estate, Silver Lakes. They might just go and look there and decide not to purchase in Newlands. Yeah.
And I mean, Pretoria is really quite vibrant and it's pumping, but I'm also not seeing the same growth in prices as you see in Joburg. And I know you guys don't work in Joburg, you do Centurion and Pretoria, but are you seeing growth in prices, or is it staying more or less the same?
So to tell you what I've seen in the last 2 years is people who bought in 2016, 17, 18 are now selling at a loss in
23,
23, 24. Selling either they break even in terms of purchase price, or they're selling at less for than what they bought for. And then, I mean, you can't consider transfer costs, transfer duty, all of that. We're looking at purely purchase price. So that is something that we've seen many a times now the last 2 years.
And Philip, you for Centurion, I know you've done a lot of work in Centurion Golf Estate, in Irene. What are you seeing in terms of trends? And I know you mentioned Centurion Golf Estate, people hold their houses for 20 years, so they should be making a profit.
Well, initially, yes, but if you also look at this, the growth has stabilized a bit. So the growth is not as much anymore for, I'd say, the last 10 years almost. It's been 50,000 a year or 100,000 a year. And that's basically your maintenance on the property. So people say, yeah, but I've spent 1 million, but then also it's grown 1 million. So you didn't really make a profit. And that's what I actually like what you guys said, that you need to think, is this for investment or is this for my personal enjoyment? Because if you want to live in a house you enjoy and you're going to raise your family there, then if you're going to try and make a profit out of that as well, you might find yourself in a lose situation. It's difficult to find yourself in a situation where you make profit in a 5 to 10 year term. When you live there for pure enjoyment, you added a pool, you added solar, you did everything which your kids would have enjoyed in the house, you made the changes. So on those types of houses, I would, Nicole, actually wanted to ask you about that sale. When did the owners, when did they buy? Was that recent as well?
So it was. Actually, they bought in 2023. So they've owned the property for about 14 months. And they're not selling they're actually selling at a loss. They've spent much more in terms of upgrades and so on. But when they sat and looked at the statistics, they'd made the smart choice and went with what would the market be willing to pay. And there we sit and we look at, I mean, Philip, you've helped me so many times looking at price per square meter. I always say it's a science when it comes to pricing your home. So yeah, they've bought recently, spent much more, and they're not breaking even at all.
But 14 months is completely, and I mean, we always say to people, think very carefully. But of course, it's not always a choice, when people are making a choice to sell. But if they sat down and they looked at all the facts and there's certain circumstances that swayed them that they have to sell within 14 months, as long as they understand you are making a loss, that's what it is. But you still, what's interesting to remember though is, what would this property rent for currently? Would you say about 18,000?
18 to 20.
So if you look at 18 to 20,000 and you multiply it by 14 months, you're looking at what, about 280,000. So if their loss is less than 280,000, they didn't actually make a loss because they would have paid rent to live somewhere, because they're living in this property.
Yeah.
So it's not really, and I think it's important for sellers and for buyers, when they stressing, what if something happens and I have to resell? You always look from a point of view of, obviously when you're buying, you want to buy with the intention you're holding for 10 years plus, because this is long-term investment. Everyone will teach you property is not a 5-year or a 1-year turnaround time. It's 10-year plus. If you are looking at 5 years, we're now talking very general statistics, so it's all averages. Of course, someone can give up an example of an outlier, but basically 5 years is the break-even point. If it's less than that, you calculate, this is what I would have been paying rent for the exact same property. And if you can still sell within those parameters, don't have the mindset of I've made a loss, because you didn't make a loss. You would have been paying rent. You're not going to live under a tree for 14 months. Then it kind of is an easier thing to accept. A lot of sellers think there has to always be that tangible amount that is, when you drew the line and you've all the expenses and all the income and all that you've made money. And people still remembering some, I don't know how long ago, because it definitely wasn't in my lifetime, of 10% growth per year. I've never seen it. And I'm definitely, I've been around for long enough to, so I think people have a very wrong perception of that. But buy with the intention to hold for 10 years. Try and hold for at least 5 years if you want to be drawing the line and have at least the zero net effect. But if it's going to be less, just accept that was the price you paid to rent the property. And because life happens, of course. And it's great that you did sell it at the price that you sold it, because it's slap bang in the middle of the average prices for the area. So the market again has spoken in that sense.
Yeah. I'd love to tell you a story about how this all came about, but that we'll leave for another day. You've got amazing buyers, amazing sellers. I sold to the same, so I sold to the sellers as well. They also paid full asking price when they bought. So,
So are you saying full asking price is a thing?
Full asking price is a thing. If you price it right, yes, then people feel like they're paying a fair price. Remember, a lot of people feel like they should negotiate, but when it comes to fair market price, we're all happy to pay a fair price. So then we can put down a full asking price offer if it's priced according to what the market is willing to pay. Yeah.
And as long as you can justify that it is a fair price, actually.
Yeah.
Yeah. Because then it's very difficult for a buyer to offer less, because if you can go through the stats and the numbers and the size and the area pricing and all that, what is the buyer going to say other than, well, I'm just doing it to try my luck, So buyers and sellers out there, full asking price is a thing in South Africa. And it's absolutely not a given that you should be buying for less.
Yeah. And I've sold quite a few properties full asking price. And it's literally, it's a thing. So don't be scared.
I'd like to share on that note. For example, this townhouse I'm busy with right now. If you if that guy listed it at 1 million, he would probably get an offer for 950, right? Because it's worth 950. But now he listed 50,000 more because he wanted to see if he could get more out of it. But now he didn't get an offer, but now he dropped it to 950, which is actually the
correct price. Market related.
Now 950 is the market related price. Now he has 2 offers of 950. So now there might be a negotiation, and one might say, okay, I want this, so I'm going to offer 960, 970. So now him actually listing at a market related price is opened up an opportunity for him to potentially get 10 or 20,000 more because of 2 offers being on the table. Whereas if you wanted to go in at 1,050,000 because you wanted to try your luck, it might be in for a few months extra, and then you'd get a lowball offer, or not even lowball, but market related offer at 950. So you'd feel like you've lost. But if you actually went in at the market related price, you're opening up that opportunity of potentially getting more than one offer, which could lead to something better.
And on that point, I mean, it's a very interesting point you're making. And it might be a better offer in terms of extra 10,000 or 20,000, but it might also be a better offer with a more qualified buyer that you are sure it is not going to fall through. So you at any given point, there's a number of buyers on the market, and people often misunderstand and think, having more agents will multiply the buyers. It won't. There's a certain number of buyers that want to buy in our area in the 10 kilometer, not even 10, 5 kilometer usually diameter of where we are. And that number of buyers also has a certain budget that they can afford. So when you price right, everyone that can afford that budget is potentially going to consider your property. So then you've got a choice of 5 people versus if you are overpriced, you have a choice of maybe one person who is maybe either not market savvy enough to know what the going rate is, or they actually don't know what they can afford. Then they put an offer. When a property is overpriced, how often have we seen it? Many offers come through and they fall through. And I often hear sellers say, no, we had offers, but they didn't go ahead. So, Michael, then you can't even count it as an offer. It's not a real offer because that person maybe, let's say when I'm a first-time home buyer and I haven't done my background checks in terms of what I can actually afford, and I just go and put offers, and then the bank checks on me and they say, no, you think you can afford 950? No, you can afford 700,000. I'm not then a buyer for this property. I'm not the right market for this property. So in your case, let's hope you can get a bit more, but it's also not too much more. You can never get 20% more because then those buyers are a different category of buyer. Then those are buyers of 1.1 million, So maybe 2%, 3%. That will be amazing. Or you get a buyer that has a strong deposit and already pre-qualified. So that owner will definitely be benefiting one way or another from either a quick sale or a slightly higher sale. So a very good point that. And I hope it works out very well.
My favorite is when they say, we're not in a hurry to sell. So let's price it higher. We're not in a hurry. We don't want to give it away. That is a mistake that sellers also make, because I look at one specific property, the maintenance there, it has a beautiful garden, but someone needs to attend to the garden at least twice a week. There's maintenance that needs to be done. That costs. If there's a bond, the bond installment is being paid. So if that property is on the market for 6 months, and if I quickly calculate the costs, yes, it's going to cost them 25,000 Rand a month. So if you take 25,000, multiply that by 6, what is that, 150,000? It actually...
You're looking at Philip, but he's already shown us his maths are not great.
Philip is my go-to maths guy.
I'm teasing you. How much is 125 times 6?
My calculator, What's the number? 125.
So it's 25,000 times 6. I think it's 150.
It's 150.
So then...
Sorry, I'm daydreaming, guys.
So they can literally subtract 150,000 Rand from the offer that they will maybe get in 6 months, which is, remember how the longer a property stays on the market, And we're now talking about the average property. We're not talking about your 20 million rand property. That might just take 2 years, and that's fine. But your average property, the longer it stays on the market, the more questions people start asking. Buyers are not, for lack of a better word, stupid. They also wonder, and they browse. Buyers also start browsing portals before they actually become serious. I've seen that. That's also a market trend. So people would phone me, ask about a property, but we're not also in a hurry. We're just seeing what's out there. We're only looking at buying next year. So buyers are also looking at what's going on in the market. So yeah.
And if I can add on that, we use Lightstone to do market analysis. A buyer can buy a Lightstone report. A buyer can buy a report on property.
Yeah, that information is actually available.
That information is open for everyone. Even on Property 24, they can buy information that has the closest, most recent sales. So all the information is available to them. So there's really no point in going in very high and just waiting it out. No one's going to fall for that.
So I actually have a friend. He's bought 2 different properties in the last, I think it's 3 years. Every time he's viewed a property, and shame on him for not using me as his buyer's agent, but every time that he viewed a property...
Do you want to name him?
Let's not. Every time he's used or he's viewed a property that he was interested in, afterwards he would buy a report from Property 24 or Lightstone and send it to me, and then discuss what he saw in the neighborhood, what he bought in 2 different complexes, what he saw and observed in the complex. He would discuss financials with me, and this is now... That agent had nothing to do with it. And this is what buyers do. They phone people they trust, and then they make a decision and say, okay, cool. Based on that, am I moving forward or not? And many of the properties he did not move forward and buy because he eventually had his reasons. But
again, because first of all, so the agent didn't gain their trust, so they didn't have that market knowledge, or they had the knowledge and it wasn't justifiable for that specific property, that specific price.
Yes.
You see, because also you might also not have enough justification. The property might be overpriced for the area or not in the right condition and all that. But yes, people are clever and savvy and do their research, and there's so much more information these days. And before you go, because I know you're going to have to run because you have houses to sell, and then Philip and I can carry on about the Centurion area, but on Pretoria East, so if I'm a buyer now, which are the hot popular suburbs? What can we expect in terms of prices, so that those of us that are watching and we're considering buying in Pretoria East, you specifically specialize in Pretoria East, so we need to be very, clear here that you're not talking about the whole of Pretoria, but Pretoria East, what should we look out for? What are the market trends?
So what we're seeing, fixer-upper properties still sell for below 2 million. So when I say fixer-upper, it could be dilapidated or just, mostly dilapidated. When it's just dated, and I'm talking about the average 3-4 bedroom. So dated properties, we're seeing prices up to 2.1 million.
And that's freestanding, full title.
Freestanding.
Okay.
Yes. We are still seeing a lot of developments happening in Menlo Park. So new developments are selling. Menlo Park is a hot area at this stage.
What are the developments selling for?
So they start.
So that's sectional title, apartments, townhouses.
Apartments, yes. They start for about 1.5, 1.6 million rand. Also square meterage dependent. And then we see, so we've discussed the sectional title, and then modern properties that have been renovated in the past 2-3 years, they sell for up to 3 million rand. Full title, freestanding properties. Constantia Parks, super hot. I just can't get enough stock. So if you're looking to sell in Constantia Park, phone me. I have buyers there looking specifically. So Constantia Park, Newlands, Waterkloof Glen, Erasmus Kloof, those areas. Then Menlo Park, Waterkloof Ridge, certain parts are doing, in Waterkloof Ridge, certain parts are doing better than others. We can get into the gist of that on another episode. So yeah, that's what.
And in terms of your new developments versus buying something that's, because there's a lot of properties in Pretoria that are 20 years old. What price range are we talking per square meter?
So,
because we're comparing apples with apples, we can't compare apples with watermelons, so we have to bring it down to literally the square meter value on a 20 million rand. What is the average? So that if I'm a buyer, I can say, okay, I'm looking now at this 300 square meter house and the average values is how much?
Okay, so if we're looking at sectional titles, so it's apartments, simplexes, duplexes. The older properties, we're looking at 8 to 11,000 rand a square. If there's been and obviously we reach 11,000 rand a square if there's been upgrades in the kitchen, bathroom, and so on. In new developments, we're looking at 15, 17,000 rand plus per square meter.
That's quite a difference, eh?
That's a massive difference.
50%.
Yes. Yeah. So it is, a lot of buyers still opt for the established complexes in the older areas rather than purchasing in the newer developments because it's more affordable. Yeah. And that is mostly buyers who buy for themselves. We also see in Menlo Park a lot of purchase. It's people from far who buy for their students, children. So that's also quite an.
So they're buying now in Menlo Park, not so much Hatfield. Is Hatfield going a little bit not as popular as it used to be?
Unfortunately. Yeah. Just like Sunnyside used to be the rich kids' playground. Now it isn't. But yeah, so things change over the year and we don't have control over everything. But I mean.
So which are the hot areas?
So hot areas are Constantia Park, Menlo Park, definitely Newlands. I would say Linwood's also doing well. Garsfontein's still very popular. Garsfontein is big. Okay, so let's not get into that.
Yeah, I was about to say, when you speak of how it's quite large, eh?
Yes,
it's also very central.
It is central, and there's more than 5,000 full title properties within. Wow. So look at Newlands, 1,200, just over that, just a bit more than that, and then Garsfontein, more than 5,000 full title properties. So yeah, there is differences, and the Garsfontein market also works slightly different to what the Newlands would.
In what sense? Interesting to know.
Yeah, so a lot more people. So if you look at Newlands, you would see people who are young professionals looking at Newlands. Maybe they've just started the family or not yet. They want to be close to the highway, and they want to get to Sandton and Rosebank. In Garsfontein, I see people who are looking at schools. The children are a bit older. They don't care. Well, maybe one of the parents would like to be close to the highway, but that's not the main factor.
The schools
are a factor. So that's where the different dynamics come to play.
And what are our freestanding houses' average prices? Because we spoke now about the sectional title.
Yeah.
8 to 11 for the older ones and 15, 17 for the new ones. What are we looking at if we want to buy a house?
So in terms of full title, not within gated communities, we're looking at between 6,000 and 10,000.
Okay.
Yeah. Sometimes we do fetch up to 12,000 for the more modern properties, but 6 to 10.
Yeah. And in terms of your estates?
Yeah, so there.
So you have quite a few.
Yes. So in terms of the estates, they would fetch higher prices, but also they're larger in size for properties. So similar prices per square meters. Maybe they start more at 7,000 instead of 6, unless they're really dated, or perhaps a fix up there.
Yeah.
Yeah, but I've also seen in recent stats saw a property that sold for just under 4,500 per square. So that also happens. I have no background to that property.
Okay, I was going to say, what was there any kitchen inside? Or,
Probably not.
because realistically, you cannot even get to a brick, and that's actually a very interesting thing that you just said, because you cannot even get to a brick and roof level at 4,000 per square meter at the moment with the current building costs. So, buying the land, and because when we talk per square meter, just for people to understand, is the land is included in that. Whereas if we were to build right now, we're buying the land and then we're building. So building cost alone is very high. And then you're adding the cost of the land that you had to pay. And obviously you have to add the cost of building for a period of minimum 6 to 8 months. And some people I know say 4 months they can build, but I've seen these houses, 4 months later they're built, yes. Another 4 months later they're being rebuilt. So, if you want to go super cheap, super fast, you get something that is super cheap, super fast. You can't compare a fast food drive-through hamburger with French cuisine, grass-fed, whatnot. So the same with the house. You can't have fast food houses and then expect quality that lasts. So it's interesting because of course there's a buyer for everything. If I'm in a stage in life that I want to buy something that is absolutely perfect right now, brand new, smells of fresh, new
Paint.
plaster and paint, then sure, I'll pay more. And not have the headache of, having to renovate, because that's, apart from a headache, potential divorce, potential, killing of people, the rage. So, but what you're telling me now is, because those kinds of prices, Gauteng, if I'm to compare to Johannesburg, the northern suburbs, which is the equivalent of the Pretoria East, Joburg North is, your basically your Lone Hill, Bryanston, Sandton, and then going through to the Midrand areas with the waterfalls, and Stain City falls under Midrand. I don't know how, to me it's more Fourways, but call it Midrand. You don't see those kinds of prices at all in any of the leafy northern suburbs of Johannesburg. You literally then making, you can weigh up your options in terms of, again, there's convenience, there's schools, there's work, but it's a very interesting observation to make for those that are looking to buy now, how they can get started with property. Very low, 5,000 per square meter.
You're going to pay a lot to renovate. Well, there's
Yes.
going to be.
I would expect that.
Immediately, so you need cash.
or you're just prepared to live in the, fixer-upper.
Is
there such a thing as the buy to flip quickly? Because in all the years I've been doing real estate, I haven't really seen it much do like a massive turnaround, but I know there is a market for that in terms of auction properties and whatever. Do you see this a lot or not so much?
It's very hard to find the stock for that. I have 4 different clients who buy to flip, and it is, you really need a property that's dilapidated is the word.
Like what percentage below market value would you say, if someone is interested in doing that, they want to do a side project and quickly fix something up and resell, what percentage below market value should they buy in order to do a few touch-ups and resell and pay all the transfer costs and the various fees and still make some money?
Marisha, that is a question that doesn't deserve a simple answer.
Okay.
Like percentage under market value. Yeah. Because the property itself, because of its state, will already be worth less than average market value. Yeah.
Do you have ideas on that?
Well, that's definitely a whole ball game of its own. People who do that, they focus in that, they specialize in that.
You need to run.
Let me run.
Okay, bye. So, Newlands, Menlo Park, Constantia Park. Okay. We must remember that.
See you next time.
Do you want to grab her more comfortable seat?
So the banks these days, they need to have a reserve on the properties as well. That's about 70-80% of
That
it.
is now we're talking a distressed property,
Yes.
some form.
Yes, but those are the ones that end up going on auction. So there's still a reserve on those.
Okay.
So to be able to get a property at 40% of its value is not very likely. There are instances of that, but if you do get a property at 40% of its value, the people that do that, they have their own construction company. So the costs in fixing it up are lower than, let's say, me buying a property and then getting a contractor out to do it, because he's going to want to make profit and that's his business. So then if I buy something at 40%, but I spend 30% of its value in fixing it up, there's not much profit in it. But I've seen some people, they'll find something at 40, maybe 50% of its value, and then fix it up because they have their own company, they have the employees, they have the connections. Then they'll fix it up with what's supposed to be a 30% into a 10%. So they'll cut costs. And that's where the profit actually comes in, if you ask me, is that you'll find that they have good relationships with attorneys, so they'll save on transfer costs. And then you also find out they try to sell it themselves, or they have a specific agent that can sell it at a lower commission. So they're basically cutting costs at every step, basically, that goes into the flip to, at the end of the day, make a profit.
And also, if they have to have their own construction company, that basically means that if they were working on someone else's project, the profit they would have made, the company profit for working on my project, for example, on my renovation, that's actually the profit now they're doing on the flipping side.
Yes.
Just with a little bit more control on their side of what they do.
Yeah, so there's actually no profit in the construction side, but it's just basically a cost saver.
Yeah.
So that the profit that would have been put on top of it is now the profit that goes into the flip. So it is quite difficult, but I think it is still possible. There are people still doing it.
But I personally would say that's not really layman's stuff. It's not someone doing it as a hobby or as a side project. I think there's no money in it for that.
No. The people that do that, they go to auctions weekly. They literally move around in networks with people that also do it. There's so much that goes into it, actually. To just buy something and think you're going to make 25 or 30% profit on it, I don't think that will necessarily go in your favor.
Yeah, 100%. And then let's move now to the Centurion area. What are your hot areas around here? Because yesterday I was taking a drive through Pierre van Ryneveld and I was thinking, gosh, we keep it because it's kind of tucked behind Irene, in between, Castlegate now, but it's so close to it's adjacent to Castlegate. It must be seeing a revival. I haven't personally given it any attention, but overall Centurion is huge. What areas do you think are hot to buy in? And obviously will be hot to sell fast as well.
So because Irene starts at about 3.5 million, I think because Pierre van Ryneveld is tucked behind that. So whereas people, if they have 3 to 3.5 million and they want to be within that area, they'd be in Irene. And if they have 2 to 2.5 million, they'd rather than be in Pierre van Ryneveld. So it's not necessarily that Pierre van Ryneveld's worse or unsafer. I just think that if you have the 3 to 3.5, you'd be in Irene because they're basically next to each other. And majority of people that are in those states, they move towards our Tambo side from the R21, or they go towards Pretoria East because it is so close to Waterkloof as well. But you have the Irene, Centurion Golf, South Downs. You have these top estates in this range, in this area, that's, I'd say, 3 to 5 million. There's actually good movement within that price range. And then towards Alderaan, Vera Park, Roy's Kraal side, you're looking between 2 to 2.5. There's also good movement. So those are your freestanding out of estates.
So Vera Park, Roy's Kraal, what else did you say?
Alderaan.
What are the average prices? 2 to 2.5?
2 to 2.5. Roy's Kraal and Vera Park maybe starting at 1.8 and Alderaan leaning towards 2.73 on the higher end as well. But there's a lot of movement there as well. It's such an important side of Centurion. So
Why is that? Schools, location, what is it?
schools, you have Laerskool Vera Park and Laerskool Rooikraal and Bakenkop and Henop. So you have 4 really good primary schools, Afrikaans primary schools within those 4 suburbs. So a lot of people start up there, because also with that price range starting at 1.8, you'll find out that when someone starts a family, that would be their entry level, that they'd buy something on the smaller freestanding side with their kids still in primary school, where they can have that yard space. And then if they want to upscale as the kids go to high school, that would most probably be towards Irene Centurion Golf Estate, where the houses are bigger, a bit more of a mature area, if I can say it that way. So yeah.
Okay. And I mean, you see a lot of money being poured into Irene at the moment with the, building still Irene Link, and then now the expansion, Leroy Merlin and all that. So I think this area is definitely on the rise still. What about Doornkliff, exactly where we're situated here? What do you observe here?
I'm not actually too sure about the history of Doornkliff and Littleton, but the way I understand it, it was always the better areas of Centurion. I think majority of these areas have the owners that's been here for 20, 30 years. So it's of the older, a lot of grandmas and grandpas still based in these areas. But also a lot of, so these area ranges is also, I'd say, about 1.8 to 2.5 on the freestanding side. So you still have young families moving in here as well.
Yeah. And I mean, that would be the equivalent of paying rent somewhere for between 15 and 20,000 rent. So I think people, the moment their family is big enough and their demand is big enough for a bigger place, if you're going to be looking at paying rent of 20,000, then you may as well buy. And that tells me that you can buy a very decent house in a very decent area, very well located within schools and highways in Centurion, where your bond repayment, of course, depending on interest rate, but let's say today it comes down again, for about 20,000 repayment a month.
Yeah, I actually agree with that. I think a lot of people that might have lived in this area for 10 years and their bond is almost paid off. At that stage, let's say they may be bought for 1.5, but they're getting 20 to 25 rent now. So your Irene and Centurion Golf, you'll find there's actually a lot of rental properties there. A lot of the properties are being rented out because the owners bought them 10 to 15 years ago. The rent is so good compared to what you're paying in the bond. So there's definitely value in holding onto your properties in Centurion as well.
So that now speaks to the long-term plan. If you hold for 10 years plus, you start seeing the benefits. And that is almost like creating your old age retirement wealth situation portfolio. So if you can hold and you can rent a property, you should rather do that versus sell.
Yeah. If a property is costing you 15 and you're getting 25 in rent, that's 10,000 profit. That profit, that's an entry level salary for some people. So you're basically earning another salary. That's very valuable. You'll see properties in Centurion Golf going up to 40 rent, especially South Downs as well, and Irene, because it's on the bigger side and it's in estates, it's very desirable. So if your bond is 20 and you're getting 40,000 in rent, that's 20,000 profit a month. I mean, again, that's a salary. Why not?
Yeah.
Why would you want to sell it? That's very valuable. I'd recommend owners then to hold on rather than rent out.
So there's actually a lot of value in purchasing still in the Pretoria Centurion suburbs. And also looking at the estates, if knowing the price ranges, Centurion Golf Estate, Cornwall Hill Estate, Irene Estate, it's the per square meter prices compared to some of the more, let's say, trendier Johannesburg estates. You're looking at huge value there.
Yeah, as Nicole mentioned, the new developments in Pretoria East of 15 to 17. I think that's, if you're looking at Irene and Centurion Golf, you can get a real nice property at 11 or 12,000 rand a square, and that's considered luxury in Centurion.
In a golf estate
In a
or
golf
in a
estate.
corner hill where there's other amenities.
Yeah, so you can really get a house, your dream home, for 11 or 12,000 rand a square, or you can get something then for 8 or 9,000 a square and fix it up, because you might not like the style of the properties that are in at 11 or 12. I'd say buy at 8 or 9,000 a square and then fix it up. You'd see a lot of that happening in Irene proper estate. It used to be a freestanding area, which is now boomed off.
Okay.
It has become very popular. So because it's also on the older side of the houses, many people then buy, renovate, and then they can hold on to that for 10 years. And it's their style. They like the tiles. They chose the layout, everything.
So you're looking at 8,000 to 11,000 for those estates. I think we're taking South Downs out of this because it is higher, but it's a bit of an outlier. But all the other estates, so Centurion Golf, Cornwall Hill, Irene proper, you're looking at 8 to 12,000 on average.
Yes, 8 to 12 on average. South Downs, we must remember, is a new development. So it's like Irene Link, newly developed. So
the costs were higher.
Costs were higher, so that's why it's reaching 15, 17, which is in line with what Nicole is getting in Pretoria East with new developments. So whether you're in Pretoria East or Centurion, a new development is going to cost you about 15 to 17. And if you buy something, you still get something that's built 20 years ago, built at a good quality, and it's still safe and still a good option. Then you can look at 8 to 11,000 a square.
Okay.
And there's nothing wrong with that. I think there's a lot of value in that as well.
Absolutely, because you definitely renovate for still less than what you would buy new now. But then, like you said, your flavor and bigger property, bigger land, usually.
Yeah, you get the garden space, you get the big trees, you get the greenery. So that's also really nice. Majority stands these days are 600-700 squares, which is quite small compared to Irene, where you're getting 1,000 to 2,000 square stand.
Yes.
So that's really nice to get that as well.
And if you want to go even cheaper, which areas would you say, like Royerskraal, or which ones of the Centurion areas one can buy that 6,000 per square meter, 7,000 per square meter property?
Yeah, definitely Royerskraal and Vera Park is, I'd say, in the 6,000 to 8,000 square meter range, which is also still nice because it's close to schools. It is quite central in Centurion. So yeah, I see there's value in that as well.
And close to the highway, if you want to work in Joburg or you want to work in Pretoria.
Yes, a lot of people do make that travel. It's not that bad. Many people, because then they say the husband works in Joburg or Pretoria East, the schools are close by, so they're saving on that side. So some people want to live close to work, but they don't mind driving far for school, or sometimes it's the other way around.
My advice, being a parent, is stay close to the school and travel to work.
Yes.
Because when, whatever happens, if your child gets stung by a bee and maybe, a friend or someone can pick up your child, quickly go home, it's one thing. If school is far from home, it just adds more anxiety. So when I'm helping my clients choose what to buy, it's usually rather focus, where's the school, go as close to the school as possible. Work, you'll make a plan. Adults can make a plan easier than children. Yeah.
No, I actually agree with that statement 100%.
Yeah. So in terms of rentals and what are you seeing the trends around here? Because I've looked around and I see rentals go very fast. So it almost looks like there's a shortage of rentals. So if one is to buy, and you can tell me if you agree with that, but if one has a bit of spare cash or is to find a long-term tenant, then it's worth it to take a risk and buy investment property in order to rent it out.
Yeah, especially in the Irene Centurion Golf area. I don't think you'll really find anything under 30. It's from 27, really, that's starting 30 to 35. So that's good rent that you can get in these areas. And if you bought for 2 to 2.5 a few years ago. And you don't need that money to, let's say you're relocating to the Western Cape, and you don't need that funds to buy there. I'd say there's a lot of value in that, in buying in the Western Cape and then renting out here. You can also have it, you can still have the listing up for sale, and have buyers go have a look in between when the tenants are in and out. If you still want to have that option open of selling, that's still a possibility.
But it's also, people forget, I think, sometimes, that you have options as well. If you need funds to buy elsewhere, you could speak with a trusted bond originator, because they can work with the banks and see if there's a way to get you a bond for the new property based on having a property that is halfway paid off, for example, and has a tenant in. So I think it's not always a must that you have to buy in order to, sell in order to buy another property. You can actually think about the fact that you can use the property you have and buy another property, as long as you found the right tenant and you find a good tenant. And that's where, there's a whole story how, you need to go about finding the right tenant, but you can have your property tenanted forever. I mean, some of the properties we have, for 6, 7, 8, 9 years rented, that's half your bond paid.
Yeah, I actually agree with that. If you're making 10,000 profit from in terms of rent, after paying your bond, and you need 1 million for wherever you're going, loan that 1 million again, but the 10,000 in profit you're making here, you can pay into that bond. So it's not costing you any extra money.
Yeah.
But at the end of the day, you now have 2 assets that are busy paying itself off. And that's when it's actually at its most valuable. That's when it's paid off. A roof over your head it's the most valuable thing, actually. So I'd really recommend to hold on to it instead of selling it then.
Yeah. Anything else you want to share about your markets, what you're seeing? So anything that can be valuable for your potential buyers or even sellers, in the area?
Something I just maybe want to add, considering the season we're moving into. So I've picked up that within your winter months, there are more listings on the market, but then towards the end of the year, it will then sell quickly. So if there are people looking to sell now, I don't think it's a bad thing. Don't wait till end of the year. You can still put it in the market now. Get the pictures ready. Get everything ready before it's winter, before the gardens are dried out. Have the listing there. Just have a bit of patience. There will be less movement, but there will still be sales. But don't lose hope. Towards the end of the year, there will definitely be a sale. When I did my market research, start of last year, throughout also winter side, I picked up there'd be 20 properties for sale in a certain estate. And then now, if I had to look over November, December, how many listings are active, there would be 7 or 8. So
at least 13, 14 sold out.
Yes.
Considering that new ones came in. Yeah.
Yes.
Okay.
So that's just something I'd say to look out for.
So from a seller side, don't hold for specific months. Just put it on the market. Just be aware and expect that it might take a couple of months extra, or it will be very fast.
Yes.
Okay. Or rather, I would say don't even wait, because if everyone's holding for September, then you're competing with a lot more. So if you put a property up now, if there's 7, let's say you looked at Irene Village Estate, and currently, and I'm just using an example, I don't know which one you gave an example with, but if there's 7 now and you put yours, you're only competing with, you be number 8, you're only competing with another 7. If you put it in September and there's 30, you're competing with another 30. So they 30 need to sell, along with yours. So I think then don't take the quiet months as a bad thing, just price right.
Yes, most definitely.
Yeah. And from a buyer's side, where should they buy, or and what should they do?
Definitely depends on what's their needs, where they work, where the kids go to school. But I don't think they should be waiting and holding on as the interest rates are dropping again. You don't want to buy once it's dropped. You don't want to buy Bitcoin once it's at its highest. You want to buy now. You'll reap the fruits 6 months later a year later. So if you're thinking of buying but not sure yet, I definitely say speak to an agent or a bond originator, and don't wait. That 6 months or a year could actually save you. In a few years' time, you'd be happy you started now and not later. So from buyers, I would say don't hold on, don't wait, take that step, do it now. It's better.
You speak from your perspective. Are you buying this year?
I'm definitely going to buy this year. I'm speaking it that it's going to happen. I'm going to buy this year.
Okay, we're holding you. This is your January resolution.
I'm going to buy.
Okay.
I already have an eye on one, but we'll speak about it once it's
We'll make it happen. Yes.
Yes, we'll make it happen.
Okay. Awesome. Thanks so much.
Thank you.
Okay. So bye.
Bye-bye.